everyone. Welcome to Betty Academy. Our job is to make school easier. If you like our videos, kindly like, share, and subscribe, and don't forget to comment down below. So today we are going to make accounting easier by learning basically by recording transactions into the relevant ledger accounts and balancing them off. So we are going to do that using an illustration, and here is the illustration. So let's go through it together. We have this is the question. We have Johnston started a business worth 400,000 cash. During the month of June 2021, he carried out the following transaction. June 2nd, bought goods worth 240,000. June 3rd, deposited 160,000 in a bank account. June 4th, paid salaries and wages 40,000 check. June 5th, bought goods on credit worth 130,000 from Beba Traders. June 5th, sold goods worth 320,000 cash. June 10th, paid insurance 15,000 in cash. June 15th, paid Beba Traders 20,000 cash. June 16th, sold goods on credit worth 180,000 to Smith. Required, record the above transactions into the relevant ledger accounts and balance them off. So we are going to start with the first thing. We are told Johnson started a business with 400,000 cash. So what you are going to do is we open a cash account and capital account. So Johnson started a business with 400,000 cash. That's why cash is an asset, and that's why we have what? We are going to record it on this other side. We start with the date, which is the year was 2021, June 1st, capital. Yeah, the money was intended to start a business, and money intended to start a business is what you refer to as capital. So we have on June 1st, capital 400,000, and it's on this other side. Then you go to capital account on this other side. Yeah. So, and you remember from our accounting equation, we have capital, you always credit it on this other side. So we have the year 2021, June 1st, cash 400,000. And according again to accounting equation, there is that aspect of double entry. So the moment you record this one on this other side, you have to record on the opposite side, which is 400,000 on this other side. Then we go to the other transaction, which is on June 2nd, bought goods worth 240,000. I hope you're able to see that. June 2nd, bought goods worth 240,000. So June 2nd, yeah, bought goods, meaning our cash reduced. So since our cash reduced here, you'll have the posting, you credit, so you record it on this other side. So bought goods worth 240,000, meaning he made some purchases. So that's why you have the year 2021 again, June 2nd, purchases amounting to 240,000, and you must complete that double entry. So you have to open a purchases account. That's why you have it here, purchases account. Now that it was on this other side, what you're supposed to do, you'll record on the opposite side. This one was on the credit side, so you debit on this other side. Anything that you do on this other side, it's what you refer to as debiting. You are debiting, and this on the other side, you are crediting. Any posting that you record on this other side, it means you are crediting. So in this particular case, we have purchases. It was 2021, June 2nd, we have cash amounting to 240,000. Then we go to June 3rd. June 3rd, we are told, deposited 160,000 in a bank account. So deposited 160,000 in a bank account. So we have, of course, when the deposit was being made, it means Johnston had some cash and he was depositing in a bank account. So we have our cash here, cash, yeah. So when cash is reducing, it means you'll record on the credit side, this other side. So June 3rd, bank account, yeah, you are depositing in a bank account amounting to 160,000. Then what you're supposed to do is to open a bank account, right? Open a bank account and do a similar thing. So what you are supposed to do again, on the date column 2021, that's the year. I hope you are able to see the bank. Hope you are able to see the bank. Yeah, so that's the bank. So under the bank we have 2021 June 3rd cash 160,000. So you've completed that. You go to the other transaction, which is June 4th, paid salaries and wages 40,000, check. So paid salaries and wages 40,000, check. So that one was not done using cash. So again, you come here to bank because you've had, like it stated, paid salaries and wages 40,000, check. So it will be recorded in the bank account. You'll have that transaction affecting our bank account. So you'll have 2021 June 4th salaries and wages 40,000. Again, now that we don't have a salaries and wages account, create one. So salaries and wages account, and mark, you remember this one. This one is it's an expense, so you have to debit. Again, you start with the year 2021 June 4th, bank account 40,000, right? So you have this one on this other side and you have your 40,000. So you've completed the double entry. Then let's go to the other transaction. The other transaction, you are told this one is June 6th. Sorry for that error. And this one is June 5th. So let's start with the June 5th year. Sold, yeah, sold. Look at this. Sold goods worth 320,000 cash. So of course, when you are making some sales, it means Johnston got some cash. So we have our cash account increasing. We have our cash account increasing. So when you look at our cash account, you have this one, June 5th, sales amounting to 320,000, right? And again, open a sales account here. Yeah, this one was on the debit side, so it will be on the other side. So it is June 5th. We have cash account amounting to 320,000. Yeah. Then we go to the other transaction, June 6th. Bought goods on credit worth 130,000 from Beba Traders. So it means Johnston did what? Bought goods on credit worth 130,000 from Beba Traders. So he made some purchases. So how do you record that? It was on credit. So we'll still have our purchases, whether they were on credit or cash, they will still increase our purchases. That's why you have what? June 6th, bought from who? Beba Traders, 130,000. Then what you're supposed to do is to open Beba Traders account, and here it is. We have Beba Traders account, and their amount is what? We are completing. It's on this other side now. The year 2021 June 6th, we have purchases 130,000. So I hope we are together up to that point. So we go to the other transaction. June 10th, paid insurance 15,000 in cash. Paid what? Insurance in cash. So what will happen? You look at our cash account here. We have what? It is June 10th, paying insurance amounting to 15,000. Then you are supposed to open an insurance account. Here it is, insurance account. Now that you credited on the other side, it will be on the opposite side. So you have what? This one is 2021 June 10, cash 15,000 under insurance, right? Then we go to the other transaction. June 15th, paid Beba Traders 20,000 cash, right? So we go to our cash account. We are paying Beba Traders. So you come here on this other side, the credit side. We have June 15th, the date, the details. You are paying Beba Traders. The amount is 20,000. Then you go to here. You are not going to open another account. So what you are supposed to do now that you had a Beba Traders account and you are paying Beba Traders, it means Beba Traders is an accounts payable. So what you're supposed to do, again, the date, the year remains June 30th. Sorry, it's on this other side. You are paying Beba Traders, and it was on June 15th, not 30th. June 15th, we have cash 20,000. So you've paid Beba Traders 20,000. Then you go to the last transaction, which is that happened on June 16. We have sold goods on credit worth 180,000 to Smith. So sold goods on credit worth 180,000 to Smith. So you are making some sales, but on credit to who? To Smith. So again, you go to your sales account. Under your sales account, yeah, hope you're able to see that. Under sales account here, you did what? You made some sales. Sales being an income, you credit. For any increase in sales, you credit. So the transaction will record it on this other side. This is the credit side. So June 16th, these sales on credit from Smith, 180,000. Now that you don't have Smith account, Smith is our accounts receivable. So you open a Smith account. We have Smith account now here. Then now that it was on the credit side and a sales account, so it will be on this other side. So you'll have the date. Here is the date, 2021 June 16, sales 180,000. And from there we are done with recording the transaction. But from the required, you are required to record the above transactions into the relevant ledger accounts. So all these ones, the Beba Traders cash account, capital account, all those ones are ledger accounts, and the other thing is to balance them off. So when it comes to balancing them off, this is what you do. You start with the first one. We have, this one is cash account. This one is cash account. So being that it is cash account, you realize that you have transaction. You have 400 and 320. The total is 720. But when you add from here 240 all the way to 20,000, you realize that you'll get it's around 400 and what? This particular figure here. So we have we can just do a quick math. We have 240 plus 160, yeah, you get 3, 4, then you have you add 35, you get 435,000. So from here you realize that on the debit side, this side is 720. The other side from here, Beba Traders, all the way up to here, you get 400 and, sorry if you're not able to see well, sorry for that. So from here, purchases all the way to Beba Traders, you'll get these figures here up to here, 435,000, here to here 720. So you realize that it's not balancing. So you take the higher side, which is 720. This one is greater than the 435. You'll put it here, 720, 720. What is the difference? 720,000 minus 435,000, you get 285,000. So what you do, you write balance carried forward, right? This one is balance carried forward. So that one, you'll carry it to the next period. So, and ensure you put what? Here, you put this particular line, then here it has to be double, meaning you foot and rule. Okay, you foot and rule. It has to be 2 lines here. And this one, being that it is balance carried forward, the other period when it starts, it will start with what? We'll have this one, you just bring it on this other side. You say balance brought forward, it is amounting to 285,000. So you go to you do that thing to all these accounts. So you go to capital account, you realize that you only had this transaction 400, you drop it off. Then on this other side we don't have anything, you write 2021 June 30th, balance carried forward 400,000, 400,000, like that. Then being that the carried forward is it's on this other side, you bring it forward on this other side. This one is brought forward, or you can even do brought down, B stroke D, brought down. And here you can even say carried down. So they all means the same. Then you go to purchases account, you have these 2 transactions. So it is totaling to 370,000. On this other side, you didn't have anything. So you write what? Balance carried forward, the total, which is 370, so that it can balance it off. And you extract this particular balance. Being that it is on this other side, you write it on you bring it forward on this other side. You go to bank account, you will have the total. You have 160,000, but and here you only paid salaries and wages 40,000. So the difference is 120,000. That's the amount that is remaining in the bank. So you have 160,000, 160,000, and here you bring it forward 120,000. Then you go to salaries and wages account. You have this one, this transaction only. You have that transaction only, and salaries and wages. I hope you're able to see that. That's salaries and wages account. So you'll have 40,000, you drop it off, balance carried forward 40, you bring it forward on this other side. Do that to sales account. Sales, you had these two totaling to 500,000. So you'll have 500, 500, balance carried forward on this other side, bring it forward on this other side. You go to Beba Traders account. When you go to Beba Traders account, you do the same thing. You do the same thing to Beba Traders account, whereby you'll have purchases on this other side, you minus this, you get a difference of 110, you get 130, 130. So this one, you bring it forward there. And here to insurance, do the same thing. You only had this transaction on this other side, balance carried forward like that. Drop it off. Then you have what? You bring forward this balance. You go to Smith account, do the same thing. You'll have this sales 180,000, carried forward 180,000. You bring it down to 180,000. So although we had not been asked required to do that, you are supposed to do what? Again, this one goes hand in hand. You may happen to get a question whereby you are required to you are given a trial balance and you wonder, where did you get that trial balance? So this is what happens. You have this one is a trial balance, and that's the way it looks like. So you have Johnson trial balance as at 30th June 2021. That's the title. And here it's the account title column. Then you'll have your debit balances on this other side, your credit balances on this other side. So you start from here, cash account, right? When you look at cash account, you have that, you realize that cash account, the balance that we brought forward, these 285,000, it's on the debit side. So what you should do, you come here and record the 285 on the debit under the debit column. You do that to capital account. This one is the capital account. You see, our balance brought forward, it's on the far end, and you have 400,000. So you do what? You do the same thing, capital 400,000. You go to purchases, you do that to all the accounts. Purchases, it is on the debit side with 370,000, and you have your 370. So you do all that to all the accounts. If it is on the debit balance, if the balances are on this other side, record on the debit balance. If it's on the brought forwards, not these ones, not the carried forward, the brought forward, these ones that we were extracting, you write them on the credit balances. Then you get the total. Here are the total. These ones, they are all the accounts that we had. Those are the accounts like that. You have the accounts that we had. So you get the total, totaling to 1,010,000. This one 1,010,000. That's the end of our video. Until next time, bye.